In this video, I'm going to show you how to read the book map. I'll make it super simple. It looks like a seizure waiting to happen, but it's actually very easy to read. And since I've started using the book map, it's become an essential for me. Every time I have to sit down to trade, I need to have Bookmap open. I feel like I'm blind without it. It's improved my trading to become more confident, more accurate, more profitable. Very much improved my edge. It's one of those things I was reluctant to learn at the start, but now it's a key part of my trading. So I'll make it super simple for you guys and break it down, and also run through which plan gives you what and everything you need to get this set up if you are interested in using it as well. So amongst retail traders, there's this commonly held belief that price action is all you need for trading. And this sets you up for failure, or at least a much lower chance of succeeding right from the get-go, because that term price action, when retail traders are talking to each other about price action, typically they mean this, right? They mean a naked candlestick chart. They think this is price action. You're leaving a lot of important information out. This information could be informing your trades for better entry signals, better stop loss placements, better trade management. So in my opinion, if you're just trading naked candlesticks, you're better off flipping a coin, right? These candlestick charts, candlestick patterns hold very little value for predicting the future or for predicting what's going to happen next. There's very little value in a candlestick. Okay, so let's look at the book map again. So this is gold. All right, gold futures, and it's the same as the chart we had here. This is gold futures, and this is gold futures as well. Same thing, okay? So when I'm looking at Bookmap, the two things I'm looking at, there's two main components that I'm reading when hunting a trade setup, and it's quite simple. So first of all, see these infrared style graphics on either side of the current price. We have current price in the middle, and then we have this sort of heat map around price. What this is showing is liquidity. These are resting orders, resting on the bid and on the offer. Everything below is on the bid, everything above is on the offer. So these people above current price are looking to sell at these levels, people below are looking to buy at these levels. So when I'm trading, I'm looking for levels of high liquidity like this. And the hotter the level, so the more we have kind of this darker yellow color, the hot the level is, the more liquidity there is at that level. You can see it on the order book on the side here. This column COB stands for current order book, so it shows you how much contracts are at each level. Okay, and that's just visualized on the heat map there on the side. And these high liquidity levels act as magnets for price. So if you guys are familiar, a lot of you guys who've initially followed me trade ICT. I don't trade ICT myself anymore, but the same principle applies as in where price is looking for liquidity at all times. So these levels of high liquidity act as good magnets on price. Price often pulls towards these levels, and watching the way price behaves at these high liquidity levels is a key indicator for me as to what kind of trade I want to take. So you can see here, for example, we had some long-term liquidity resting here at 23.43. Price came down, bounced above it for a little while, right? And then traded through. We traded that liquidity out, and price then pulled down. Then we had a liquidity into the offer right above, a high level of liquidity into the book right above price when it dropped down, for price to then quickly trade back up into that and take it out. That liquidity initially drew price down. We had liquidity into the book here on the offer, drew price back up, hovered around this middle ground for a bit. We had liquidity stacking here at these price levels. You can see indicated by the yellow and the darker blue here. You can see that liquidity started to stack, that drew price towards it, traded most of the levels there, and now we are sitting right here in price. So if I was to predict where prices to go next, I'd say we trade down into this level of liquidity here on the bid, and then we push up into this higher level. Okay, so I find Bookmap very useful for determining these levels of liquidity and determining where price will be drawn to, and also for the reaction we get at these levels. And this is information you can only see on a Bookmap. You can't see how liquidity is behaving on a candlestick chart, nor can you even see where liquidity is at all, right? At this point, you're just guessing. The general idea is that there's liquidity at swing highs and swing lows. That's not always the case. A lot of the times it's resting at totally random levels in the book, or it's resting at the body high instead of the wick high, and vice versa. It's just things you cannot see on a candlestick chart. You're completely blind here, trading only candles, whereas with a Bookmap, at least you can confirm where those liquidity levels are and use that to your advantage, whatever your trading style. So that's the first thing I'm looking at when reading the Bookmap, are those hot levels there. And this works on gold, on the S&P, any futures product you trade, you will see the same information here, different levels of liquidity on different levels of the book. The next thing I'm looking at on the Bookmap is, notice the bubbles. A lot of people see these bubbles and like, what the hell is that meant to represent? What the bubbles represent are this. So if resting liquidity is what we call passive liquidity, meaning they are intending to buy and sell at these levels. Okay, they're not executed yet, but they intend to do business at these levels. Passive liquidity. Bubbles represent aggressive market participants. Okay, so they're not passive, they are transacting at these levels and choosing to market order instead of limit order. Market order means you're crossing the spread, sacrificing a tick or so in order to execute your position. These are aggressive participants that want to get into buys or want to get into sells at any particular time. It gives us an idea of who is willing to follow through at each price level, not just who's intending to follow through, as in the resting liquidity, but who is willing to actually follow through and move price, the buyers or the sellers. The bigger the dot, the more aggression, the more willing and active participants are engaging at these levels. So the bigger dots represent more buying if it's green. Red dots, if they're bigger, represent more selling if red. And there's many ways you can use this to inform your trades. I'll tell you 2 ways I'm kind of looking at these volume dots. Is if we see large green bubbles moving upwards, for example, and the bubbles are large, like considerably larger than the red dots, that shows buyers are in control there, right? We see small red dots here, but then large green dots. Large green dots. If you hover it, you can see how many contracts transact. We got 30 contracts buying here at 2343. Whereas we only had 2 contracts selling at 2343.175. We can see there's a lot more willing buyers at this level, and that will inform you, okay, it looks like buyers are in control here. You could, if it was part of your strategy, get long with the momentum there. We got a lot of buying going on, very little selling, and prices pushing up, pushing up, pushing up, pushing up. If we see large green bubbles moving up and small red bubbles moving down like this, that indicates to me that bulls are in control as they are more aggressively buying and hefting the offer, whereas sellers just really limp dicking it, right? They're just hitting the bid with little to no success, not really moving price. But when buyers buy, they're pushing things up. That gives you an idea of what the current trend is for that price leg. If you're wanting to go long and you see this type of action, you see weak selling coming back down, that might be a good pullback to get long, okay? If it fits in with the rest of your trading strategy, might be a good pullback to get long at that point. The other way I like to use this is when we're at levels of high liquidity as well. And we look at this level of liquidity here that traded earlier. There was a higher level of liquidity on the gold here. You can see, first of all, sellers sold down, but then we had buyers step in. We had big green buying volume happen. They didn't want price to trade into that level, so buyers stepped in, kind of front running this larger level of liquidity, pulling price away a bit. Then the buying started to dwindle out, so you got small buying up at the top here, selling. It's fairly equal. We have a bit larger buying, but they're unable to move price, okay? Unable to move anything. A little bit of selling. Buyers kind of lose interest. We sell down, sell down, sell down. Buyers try to step in again, but notice how buyers are stepping in, but immediately we're getting sellers that are crossing the spread, and they're really now trying hard to sell into this level, right? They're selling hard here, selling hard. No buyers are present at this point, right? We've sold hard. We drop into that level. We sell hard. We trade that level. We sell at this level. We get very small. We got a volume of 1 here. 1 contract transacted to buy, 31 transacted to sell at this level. Okay, so we're seeing aggressive selling stepping in at this liquidity level. So rather than this level being support, or rather than us bouncing from this level, with sellers really selling hard into this level and price moving down, you can see very weak buying, very, very weak buying after that big sell, and we start to move down. So I'm interested in how price behaves when you reach these liquidity levels. I'm interested in looking at these volume dots to see, okay, how aggressive are we moving into these levels? Do we have aggressive selling? And if we do have aggressive selling, if we're going to continue through that level, is there weak buying? Are sellers willing to continue selling past that level of high liquidity? If so, we're probably going to keep moving through it. And vice versa, if we saw a big amount of selling here and we tipped through this high liquidity level, but then we saw larger green bubbles step in, well, then it might be a sweep in reverse. So you can see these things by judging the volume from the volume dots, how buyers and sellers are behaving at each level. We move down here, we got a lot of selling step in here, a lot of selling to push down further. We have 49 contracts hit the offer there to sell, but immediately once buyers saw that, we had big buying volume step in. Sellers fizzled out, as you can tell by the shrinking red balls here at the lows. Not a lot of activity compared to previously in the leg. And then we start to push back up, buyers starting to transact with almost a total lack of selling on the way up. These volume dots are just a good way to visualize who is in control when selling is fizzling out, when buying is fizzling out. As you can tell at the very top, you can see buying is quite weak at these swing highs, but strong at the swing lows, and vice versa. So those are the main two things I'm looking at when I'm reading the heat map, and I use this to inform my trade. So if I'm looking to go long at a certain level of liquidity, I want to make sure, number one, how price behaves at the level of liquidity. Do we see sellers wanting to sell below into that level? Or do we see buyers stepping in, want to trade away, as visualized by the volume dots? And I'm wanting to see how liquidity shifts in the book and where these resting honeypots of liquidity are in the book as well, so I know where to aim towards. But that is how I'm reading the book map, looking at liquidity and seeing how buyers and sellers are behaving at these levels to determine the direction of price. That's the bare basics of how I'm using Bookmap. There are other tools you can use, which I'll make some further videos on if you guys want. Like I have a iceberg indicator here, and also a stops indicator, so you can see when stops get run out. So when price pushed up to this high here, it's showing that there was a little bit of a stop run here before pushing back down for a bit. And icebergs, I'm going to insert a clip from today's stream about the icebergs indicator. Basically, icebergs are larger players that need to cut their orders up into smaller positions. So they have 300 contracts they need to execute around a certain price, but they don't want to show their position in the book. They will split that position up and just execute one at a time, two at a time, three at a time, in small numbers and in rapid succession at a certain price level in order to spread their position out and not make it one big 300 contract execution. Look at this clip from today's stream this morning and seeing an iceberg, a large iceberg execute, and the effect that has on price. I'll place that clip here now. Contracts just over and over again and keep reloading a certain offer. This is Bookmap's iceberg indicator, so it shows you when those icebergs are executing. So you can see here, this is just showing there's still an iceberg order at that level. It's executed 93 to go long from 548475. So it's telling us it's still there in the book, waiting. So if we trade back down to that level, you'll see it'll execute some more. 5482 still stayed there. There's an iceberg getting filled. Look at that, 100 contracts executed on the iceberg. Iceberg orders closed, jumped like 10, 15 ticks. So that's an interesting thing to see. As soon as those got filled, bang, bang, push up. And see how you would not ever be able to see that on a candlestick chart. There's no way you could tell it's about to happen on a naked candlestick chart. So I'll make more videos on icebergs and the other Bookmap features that I like to use. If the demand is there, you guys let me know in the comments. Otherwise, this is the bare basics of how to read Bookmap. It's actually very simple. Bookmap has partnered with me as well. Again, I don't partner with any product or company unless I use them and think it's a valuable tool myself. So if you do wish to use Bookmap, you can follow the link in the description there for Bookmap. And the plan you're going to need is the global plan. So just click monthly if you want to pay monthly, yearly, or lifetime. Monthly is what most people choose. Choose that global plan, $49 a month. That's the bare minimum plan you'll need to use this for futures trading. So select that subscription. Once you've got that, if you don't already have live data, you can grab it through Bookmap as well. Once you've gone to the checkout, select the global plan, and then at the checkout, if you use code CAMCAP, that will give you 20% off your first month subscription as well. So hopefully that made sense, guys. Made some sense of the Bookmap. Again, if you want to see more Bookmap trading setups and strategies and more specific Bookmap features, put that in the comments below. Like the video, let me know that you enjoyed this, and I will get to working on that for you. I'm also going to be using this on stream as well, so join me for the trading streams Monday to Friday here on YouTube if you want to see some more of this in action as well.